Major news in the crypto world. The CEO of Binance, CZ, agreeing to plead guilty to federal charges and step down from the company.
So unfortunately, no one is having a worse day than Binance. And by Binance, I mean Binance.
Actually, it's Binance.
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 So CZ essentially pleaded guilty to breaking what's called anti-money laundering laws, or AML. And even though Binance exists outside of US regulatory purview, US customers still made a pretty substantial chunk of their income.
Zhao told senior management that the US market represented 20 to 30% of the company's potential revenue.
As a result, they were fined $4.3 billion. CZ was forced to resign his position as CEO. There was also over $1 billion that was withdrawn from Binance. And now we'll get to see what the real damage could be in just a couple of weeks or maybe a couple months, because this whole event divided the crypto industry into two sides. The popular side says Binance's downfall is overall a good thing. Now it's the next chapter of crypto's story where it purges itself from all the bad actors that could potentially hurt the space, which should clear the pathway for good regulations so that grown-ups, financial institutions like BlackRock, could finally clear the path for their Bitcoin and Ethereum spot ETFs to get approved. And Bitcoin's price reflects this because it was up 5% this week despite the news. On the other side though, a less popular opinion, but I think equally as valid to pay very close attention to, is one that says, now that the US government has access to Binance, they'll be able to see all the past fraudulent activities, all the past Tether and stablecoin price manipulation tactics, all the wash trading, and all the money laundering. And this could set the crypto industry back a long, long time, not just from a regulatory perspective, but perhaps price-wise as well. So I want to share with you this new development and present both sides of this perspective so you can make up your own mind, and let's get into it. Hi, my name is Andrei Jikh. Hope you're doing well, and I've always wanted to say this: come for the finance and stay for the Binance. Or in Miss Janet Yellen's case, come for the Binance and stay for the finance. You know, I've always thought it was kind of a bad scenario when a compliance officer, which is the person you hire to make sure that you're following the law, says that your new marketing slogan should be this:
Washing drug money too hard these days? Come to Binance. We got cake for you.
So what actually happened this week changed my whole perspective on the entire crypto timeline, because I used to think that we'll probably get the approval of a spot Bitcoin ETF in the first quarter of 2024. But now I'm not so sure, and I'll explain why, but first I want to share with you the government's perspective on why they thought it was necessary to go after Binance first.
The array of illegal conduct allegedly facilitated by Binance was breathtaking. The U.S. government said that Binance did not renounce its U.S. business as it had claimed, and instead worked with large U.S. customers to hide their locations. And the government said the crypto exchange even developed a process to notify VIP users if they became the subject of a law enforcement inquiry.
I'm not exactly sure what Binance means when they refer to VIPs. Maybe that means very illegal people.
Binance allegedly facilitated terrorist financing for the likes of Al-Qaeda, ISIS, and Hamas.
Okay, yep, definitely very illegal people. Because here at Binance, you're not just a VIP, you're a VIP squared. Binance allowed these criminal activities to take place, and it even had systems in place that warned them ahead of time if they got too suspicious. And it wasn't just the criminal groups, it was also sanctioned countries, which are supposed to be blocked off from any US financial services and the dollar.
Binance enabled nearly $900 million in transactions between US and Iranian users, and it facilitated millions of dollars in transactions between US users and users in Syria and in the Russian-occupied Ukrainian regions of Crimea, Donetsk, and Luhansk.
And because Binance allowed all of this to happen, they were fined a couple $2 billion.
The Justice Department is requiring Binance to pay $4.3 billion in penalties and forfeitures.
Now, the US Treasury actually says that was the biggest punishment they've ever bestowed on a financial institution. The truth is, he could probably pay all the fees from his own wallet if he wanted to. And even though he's not allowed to operate as the CEO for the next 3 years, he could still technically come back after that time period is up and serve as the CEO again. So this doesn't seem like it has anything to do with punishing or getting money, and if anything, it has everything to do with gaining access to the past, present, and future financial transactions of Binance. So that's the government's perspective. And now the question is, what's going to happen next? And here's where we get the two opposing theories. So just a quick refresher about what happens next in crypto that everyone is so excited for is of course the approval of a spot Ethereum or Bitcoin ETF. And remember, that's the thing that will allow investors like grandpa and grandma to put their Bitcoin and Ethereum into their 401ks and retirement accounts directly through their jobs and brokerages. Everyone is excited and it's a huge deal. So one of the theories says that the downfall of CZ and Binance is overall a good thing because by ruling out a bad potential player in this space, it should hypothetically clear a pathway for the approval of one of these spot Bitcoin ETFs. Even JP Morgan chimed in to say that this is a good thing because it eliminates another possibility of a systemic collapse, especially because Binance represents roughly 40 to 60% of all the Bitcoin trading volume. The second biggest exchange isn't even close at 5.4% and Coinbase third at 5.3%. And even the CEO of Coinbase, Brian Armstrong, says that his strategy of actually working with the regulators is finally paying off.
This is really a vindication of the long-term strategy that we've taken to focus on compliance, make sure we were building a trusted company. And in this environment, we're seeing that regulators are finally acting and they're creating that level playing field. So I think this is vindicating of our strategy. And I think it's good for the industry too, to sort of turn the page, make sure that we're following the laws where it's clear today around AML and KYC.
Brian also argues that even though Binance allowed all these illegal things to happen on their platform, that still only represents a small percentage of how the crypto space is used day to day, especially when comparing to the dollar, which I thought was a good point.
And one thing I think a lot of people don't realize is that if you look at the best third-party data out there, less than 1% of activity in crypto is for illicit purposes like those that you just described. By the way, the US dollar cash is about 4% used for illicit activities.
Another piece of evidence why everything is technically going as planned is that even the SEC commissioner, whose job it is to protect investors, says that there's no reason why they haven't approved a spot Bitcoin or Ethereum ETF.
I've thought for many years now that there is no reason for us to stand in the way of a spot Bitcoin exchange traded product.
And even Fidelity this week joined the list of companies that are also trying to get their own spot Ethereum ETF. So all good news for Bitcoin and Ethereum. This is the popular theory, which is that the approval of the ETF is right around the corner sometime in Q1 of 2024. But now let me just flip the script and show you how this could all go wrong. Now, you might remember, by the way, in BlackRock's ETF filing, their custodian of choice, aka the company that's going to manage their assets, was Coinbase. And Coinbase is not on the best terms with the SEC right now because they have their own lawsuit going on. Of course, for completely different reasons than anything we've talked about, but the point is, it would look a little strange if the SEC approved an ETF where the custodian company was a company they were actively suing still. So until that's resolved, I think we'll have to wait. But that's a smaller problem. The bigger problem is still Binance. And this is something I accidentally found, but I want to share with you. And credit to this guy, by the way, for providing a very interesting perspective on this that I did not consider. Please keep in mind that a lot of what you're about to hear is kind of speculative. It's me guessing, but it did make me go, that makes a lot of sense. So here's what the theory is. Now that the SEC has access to Binance, it will see every single transaction, every scam, all the wash trading, and all the price manipulation that happened with Tether that pumped up Bitcoin's price.
What does CZ being captured have to do with anything about an ETF? Because if you look at every time on the ETF, on why it's been disapproved, they mention money laundering, money washing, stable coins, USDT in particular. And if you're watching what the Senate was saying about 2 weeks ago, when they said, hey, we need to go invest, the DOJ needs to investigate CZ, Binance, and Tether. And now they actually got CZ, which will give them access to Tether because of all the transactions that exist on Binance. And if you read the ETF filing from BlackRock themselves, they never mentioned CZ as a problem to BTC. Do you know what they mention? USDC and USDT.
And he also argues that CZ is just the beginning of their research, and they'll have to go after a lot of other individuals before they consider approving an ETF. Because one of the other theories that he has something to do with an exchange called Kraken.
Did you know that in 2021, Kraken earned more than $43 billion revenue from trading-based transactions? A company like Citadel Securities did only $13.3 billion in that same time period. You know what that sounds like? Sounds like wash trading.
So let me break this down. Citadel is a financial institution that has their hands in every financial cookie jar because they are the biggest market maker of US equities in the world. They see 40% of all the trading volume of US equities. At least 1 in 4 stock trades go through them. Now, between 2020 and 2021, Citadel Securities made a little over $13 billion. But in that same time frame, Kraken, which isn't even the world's biggest crypto exchange, somehow made 3 times more than they did. And I think it's a legitimate question to ask, how is that possible? And you might say to yourself, well, Andrei, that's because crypto had a bull run in that time frame. But you also have to remember, the stock market experienced the exact same thing. Instead of the 7 to 10% per year it's supposed to go up by, the S&P went up 18.4 and 28.7% respectively for 2020 and 2021. So again, the question is, how is that possible? The theory, and remember, this is just speculation, this is not proven, but how some of the exchanges potentially made so much money is because of a concept called wash trading.
Because people are using wash trading to get around capital gains on their stock market.
All right, so this is going to get really complicated, but stay with me for just a minute. Wash trading can do 2 things. It's not really used to lower your taxable gains. It can in crypto because there's no law that says you can't do this. But the way it works is this. A crypto example. Let's say I have Ethereum where I'm down $100. Well, now, if I sell the Ethereum, I lock in my losses. I have realized a $100 loss. But then I buy back in immediately. So for me, nothing changes other than I could say I actually lost $100. But then I go to my Bitcoin holding. Let's say I'm up $100 on it. And I sell it. Well, in this case, that $100 profit, I would have to pay taxes on. But because I sold Ethereum where I lost $100, I can take the loss of 100 and the gain of 100, and they cancel each other out. Now I wouldn't have to pay any capital gains on the $100 Bitcoin profit. And I can do this with an unlimited amount of profit so long as my losses can equal out my gains. Now, if my losses are greater than the gains, then I can only carry over a maximum of $3,000 per year. So here's an example. Let's say that I lost a huge amount of money, $30,000 with Ethereum, I sold my position, and I'm down 30 grand. Well, then I could take that $30,000 and essentially amortize it $3,000 for the next 10 years. That's how that would work. I can carry over my excess losses up to $3,000 every single year. Except just understand that doing all of this within the context of the stock market is not allowed. It's not a legal thing to do unless you wait 30 days to buy back into the losing asset that you sold. Then that's technically called tax loss harvesting, which is a legitimate strategy that investors actually use. But doing this in crypto is allowed technically because there's no law that says you can't. But anyway, all of that is kind of cute and useful, but that's not what the SEC really cares about. That's more of the IRS's job. It's a tax implication. What the SEC actually cares about with wash trading is the second thing that it can do, which is manipulate the price. The way it works is you buy a thing, then you sell a thing, but then you buy that thing back from yourself from a different account. That creates something called trading volume. It creates potential income sources that are not real. It can even legitimize marketplaces that are not real, and it can create price action without incurring any real market risk, therefore tricking people into buying into assets that are heavily manipulated and inflated. And that's the thing the SEC cares about the most. They want to make sure that these potentially fake and inflated marketplaces and assets are not being commingled into grandpa and grandma's retirement accounts. And some people even criticize that over 90% of the crypto projects out there are created specifically for wash trading and price manipulation. And that wouldn't even surprise me. But now that the SEC has Binance under a microscope, they will not allow this to happen anymore. So what happens when all of the fake trading volume disappears from the world's biggest crypto exchange? I'm guessing a lot of these prices will deflate for the assets that were involved in this. And based on what they find in the future, they can even delay the approval of their spot ETFs. Now, all of this, of course, is speculating. I'm just guessing. But maybe that's why we're seeing certain exchanges and individuals supposedly losing hundreds of millions of dollars. Maybe they're just filling in the losses for the money that's unaccounted for that the SEC will now be tracing and will want to know exactly where it's at. I know that all of this is way far out there, but it got me thinking. So overall, here's my personal opinion. Taking everything into consideration, I think the approval of a spot Bitcoin or Ethereum ETF could be a lot farther away than I previously thought, depending on what the SEC will find from Binance. And between now and the approval, I think we'll see some really interesting price action, and I couldn't even begin to guess what we'll actually see. But in the long term though, I'm super excited about these ETFs, and I think they'll tremendously help Bitcoin and Ethereum in the long term because the SEC has put themselves in checkmate when they approved the futures ETFs. Because despite all these allegations, the futures ETFs face the exact same issues, and so they can't approve one without eventually approving the other. Whether that's Q1 of 2024 or 2025, I have no idea, but in the meantime, I think it's important to stay safe, to be cautiously optimistic, and take your Bitcoin and Ethereum off the exchanges and just stay safe. But as far as what actually happens next, I think CZ himself said it best.
This incident will set us back a bit, but then the industry will become healthier. So it's actually better in the long run.
I hope you got some value out of this. If you did, smash the like button and subscribe if you haven't already. I hope you have a wonderful rest of your day. And remember, still not a crypto channel. Don't forget to grab your free stocks. Links are down below, and then go track them automatically with the spreadsheet link down below in my Patreon. Love you. Thank you so much for watching this video. I'd love to see you back here on Monday and Friday, sometimes a Wednesday. See you soon. Bye-bye.